Hello everyone, welcome to Investors Insights. Today is Mr. Booth and myself. Glad to be with you. Greg and Bobby are in client meetings this morning, so we'll miss them being with us this morning, but they wanted us to encourage you to give them an email or phone call if you like. The title of our vlog this morning is Economically, What is the Missing Piece for Markets for the Rest of the Year? Trey, good morning. Good to see you.
Yes, sir.
We've got a lot of data coming out this week and a lot of variation in data coming out. We've got manufacturing from ISM, we've got non-manufacturing from ISM, we've got housing starts and construction, we've got the ADP employment report Wednesday, we've got the Labor Department employment. A lot of data coming out this week. The first thing we wanted to look at a little bit, though, is Trey talk to us about earnings reports and kind of where we are with that.
Yeah, to kind of the point of what you started off with, what's the missing piece? So last week was the busiest week of earnings, and earnings are coming in great. We got 76% of companies are beating estimates, but the market for some reason was actually flat to down last week. So we feel like we might have hit the end of the runway on where earnings can drive the market. So what's the next big next piece to drive the market higher from here? We're looking at that. A lot of it can be the economic data that's coming out. A lot of it could be out of DC. I think no one would say that last week was a boring week in DC. We saw a lot of disappointment, and so really have companies are doing great. They're making a lot of good products. They're selling them. Consumers are buying. The GDP data showed that, but the market really kind of didn't extend on that information. Have we kind of baked in all that corporate America can do, and do we need to find the next missing piece to push us further? And I think you looked into the GDP data last week, and that may be what's coming up next.
That's right. Trey and I were talking about the GDP data for second quarter revised, which came in on Friday at 2.6%. Very healthy, still not where we need to be at that 3% north. We've told you on the vlog before, when we hit that level and higher, that's really going to have a lot of good things happen. But if you break the GDP number down to Trey's point about where is the missing piece, corporate investment is really good. It's up 5.2%. The consumer had a great quarter. They were up 2.8% from an anemic quarter before. Housing was down, but the reason for that is that we've had an unusually warm winter. So a lot of housing starts really came in the first quarter. That's unusual.
You can pull out,
and so
pull
you can
forward.
pull back. Mm-hmm. So really, as Trey said, if you normalize that out, that's still been pretty good over the beginning of the year. So when you look at that and break it apart, business is doing their part, it seems. The consumer is doing their part, it seems. But it looks like the political environment is really one of the main missing pieces that holds us up. Agreed?
Yeah, completely agree. August and September are traditionally very weak months for the stock market. And I think it's because it's maybe a dead period for earnings and a dead period for DC. Typically there's this big August recess. We could get a surprise to the upside from the fiscal part of Congress maybe passing something. Yes. I think expectations are very low. That could be the next leg. Or if the Fed says, there's no inflation here, why are we raising rates? That and kind of pauses on the rate rise, that could be the next piece. So really, you hate to say it because it appears to be extremely dysfunctional, but the next piece may have to be coming out of DC.
Exactly, and it seems to be detracting from it, like with the healthcare last week. So we hope you've enjoyed this, hope it's given you some good data. Please feel free to contact us or go to Facebook, LinkedIn, and Twitter. Love doing it for you. Have a great week.